Welcome to Gold Investment Bonds, investors, and future financial trailblazers. You've heard gold is the key to wealth, a bedrock investment that stood the test of time. But let me tell you, while gold shines bright, a single misstep in a gold IRA can leave you in a financial abyss, tarnishing not just your portfolio but your entire retirement plan. Stick around as we unearth the top 5 mistakes that can turn your Gold IRA investment from a treasure chest into Pandora's box. Trust me, you don't want to miss this vital wisdom that could make or break your golden future. Now, before we mine deeper into these gold investment pitfalls, do me a quick favor, hit that like button below, and if you're new here, go ahead and subscribe. Not only will you get great financial advice, but for those who stick around until the end, we've got some incredible, exclusive gifts that will supercharge your Gold IRA journey. Ring that notification bell so you're the first to know when we drop more golden nuggets of wisdom. All right, your anticipation is as golden as the subject of our discussion today. Shall we dive in? Kicking things off at number 5, we've got a mistake that many newcomers to Gold IRA investments often overlook: not buying enough gold. Yes, you heard it right. While too much of anything isn't good, when it comes to gold, scrimping can cost you big time. Imagine this: you're building your dream house. You've got the blueprint and the contractors, but then you decide to skimp on the bricks. What do you end up with? A shaky foundation that makes even entering your home a gamble. That's exactly what underfunding your Gold IRA is like: an unstable financial house built on a wobbly foundation. According to a study by the World Gold Council, a balanced portfolio should allocate between 5% to 10% of its assets in gold to truly benefit from its hedging abilities, especially in times of inflation. Anything less, and you're merely glossing over the cracks in your financial portfolio rather than fortifying it. So what's the takeaway? The essence of this point is simple: commit to your Gold IRA. When you invest, go for a substantial amount that aligns with your financial goals and risk profile. Consult your financial advisor, and make sure you're not just throwing a couple of gold coins into a well and making a wish. Make it a calculated move for lasting financial security. So, are you funding your Gold IRA enough, or is it a half-hearted attempt? Think about it as we move on to our next big mistake. Charging forward to mistake number 4. Buying gold as a short-term investment. The allure of quick profits. But let me tell you something, treating gold like a get-rich-quick scheme is a golden ticket to financial ruin. Imagine you're an amateur gardener who plants a seed, then digs it up every other day to see if it's grown. What happens? Not only does the seed not grow, but you've also wasted your time and energy. Gold is a lot like that seed. It's an asset that needs time to grow and flourish. A report by the London Bullion Market Association states that the average annual return on gold between 1971 and 2019 was approximately 10.6%. But here's the catch: it was not a straight-line growth. There were years of both exceptional highs and crippling lows. So, if you're looking to cash out in a year or two, you're playing a risky game. Here's the golden rule: treat your Gold IRA as a long-term investment. How long? Financial experts suggest a minimum of 5 to 10 years to truly realize gold's potential as a hedge against inflation and market volatility. Yes, that requires patience and foresight, but those are the building blocks of a sound financial future. So, are you still thinking about that quick gold rush, or are you ready to commit to long-term prosperity? Mull it over as we dig deeper into the next big blunder. Now, as we chip away at our countdown, we arrive at mistake number 3: investing in gold ETFs or gold exchange-traded funds. On the surface, they seem like an easy and convenient way to invest in gold. However, here's why you might want to rethink this popular investment vehicle for your Gold IRA. According to a report by the investment company Institute, the total assets in commodity ETFs, which include gold ETFs, were approximately $128.7 billion as of 2021. A hefty sum, yes, but one subject to market risks that don't affect physical gold. Remember, ETFs are financial derivatives. They are subject to management fees, broker fees, and even possible dissolution of the fund. If your goal is to have a true hedge against inflation and economic volatility, consider investing directly in physical gold within your IRA. Why? Because the value of physical gold doesn't rely on a third party's financial stability or performance. It's the most direct form of owning this timeless asset, offering you both peace of mind and a more secure financial future. So, are you still smitten by the convenience of gold ETFs, or are you beginning to see their underlying cracks? Digest this as we unearth even more critical mistakes you'll want to avoid. We're nearing the peak of our cautionary mountain. At number 2, we have a mistake that's as tempting as it is dangerous: storing gold at home. Now, who wouldn't love the idea of having their wealth within arm's reach? But beware, this is a path laden with peril. Imagine hoarding all your family jewels and precious heirlooms in a showbox under your bed. Sure, they are close, but are they safe? You might think so, until the unexpected happens. A break-in, a fire, or even a flood. Now your invaluable assets are at severe risk, and you're left to rue the day you opted for such a makeshift safe. An FBI report states that property crimes, including burglaries, led to estimated losses of $15.8 billion in the US in 2019 alone. And guess what criminals love to find? That's right, gold. What's worse, some home insurance policies have limitations or exclusions for precious metals, making your at-home gold stash a gamble of the highest stakes. The bottom line: don't store your Gold IRA at home. Instead, opt for an IRS-approved custodial service that specializes in storing precious metals. These depositories have state-of-the-art security, insurance, and the expertise to ensure your gold is safe from both physical threats and legal repercussions. So, does that showbox under the bed still look like a good idea, or are you starting to see the value of professional storage? Ponder on that as we reveal the biggest, most consequential mistake you could make when investing in a Gold IRA. And now, the moment you've been waiting for, mistake number 1. Hold on to your seats, because this one is a real doozy. Buying gold coins without learning about numismatic value. Before we dive into mistake number 1, let's take a quick detour to explain a term that might be unfamiliar to some of you: numismatic value. So, what exactly is it? Think of it this way: all gold coins contain some amount of pure gold, which has its own market value, often referred to as bullion value. But not all gold coins are created equal. Some are more than just a weight in gold. They are pieces of history, artifacts that tell a story, and those stories can be incredibly valuable in their own right. The condition of a coin plays a significant role in determining its numismatic value, and this is often evaluated through a grading system that ranges from 0 to 70. A grade of 70 represents a coin in perfect condition, while a lower grade indicates wear and tear, scratches, or other imperfections. It's important to understand this grading system because the higher the grade, the more valuable the coin is likely to be in the eyes of collectors. With that groundwork laid, let's unveil the most egregious mistake you could make when investing in a Gold IRA. A study by the Professional Numismatists Guild estimates that the numismatic market in the US alone is a $3 to $4 billion per year industry. However, not every gold coin qualifies as a valuable numismatic asset. According to various estimates, some numismatic coins have shown an appreciation rate as high as 25 to 50% over a decade. But this is true only for the right kinds of coins. A poorly chosen numismatic investment can lead to stagnation or even depreciation. So what should you do? Education is key. If you're interested in investing in numismatic coins within your Gold IRA, consult a reputable coin dealer or a certified numismatist. Make sure that you're buying coins whose value is recognized and authenticated. Some Gold IRAs also allow for the inclusion of certain numismatic coins, but it's crucial to know which ones qualify under IRS regulations. There it is, the number one mistake to avoid. Are you a numismatic novice, or are you ready to invest like a pro? Take this invaluable lesson to heart as you steer clear of these pitfalls in your Gold IRA journey. Now that we've taken you through the top 5 mistakes people make when investing in gold, you're probably wondering what the best course of action is to avoid these pitfalls. Well, wonder no more. We have something special for you. Let's talk about Augusta Precious Metals, a true guardian of your investments and a beacon of transparency and trust in an industry often filled with uncertainty. From overseeing more than 50,000 transactions since 2012 to prioritizing customer education and satisfaction, Augusta sets itself apart from the competition in multiple ways. Their experience translates into bulk buying power, making sure you get more for your investment. They're offering financial security. They guide clients to craft the ideal mix for their gold and silver IRAs and even offer platinum and palladium to diversify your portfolio. When it comes to storing your precious metals, Augusta has you covered with top-tier storage facilities that are insured up to $1 billion and feature state-of-the-art security measures. Augusta has been recognized as the best overall gold IRA company by Money Magazine, and even legends like Joe Montana trust Augusta for their precious metal investments. No hidden fees, no surprises, just transparent, straightforward pricing so you always know where your money is going. To take the first step towards smarter precious metal investing, visit goldinvestmentbonds.com/visit-Augusta. All right, folks, we've uncovered the top 5 mistakes people often make when investing in precious metals and how Augusta Precious Metals can provide you with the solutions to avoid them. This is a journey towards securing your financial future, and it's crucial you've got the right partners to guide you. Remember, we promised gifts for our dedicated viewers, and we like to keep our promises. For the spectacular gifts that every gold enthusiast will cherish, click the link in the description box below. Now, if you found value in today's video, please smash that like button, and if you haven't already, make sure to subscribe so you never miss out on insights like these. And we love to hear from you, so leave a comment below sharing your thoughts or questions. Once again, this has been your ultimate guide to avoiding mistakes in precious metals investing. See you in the next video. Keep shining.